Your shares were higher in 2016 than they are today. And for all of the good things that are happening and going your way right now, including missteps by some key competitors, what's it going to take to really, kind of swim against a tide in which people are, they're just not the beer drinkers they once were?
Well, Kelly, I think we've had a fantastic second quarter. It's actually a record quarter for us. And since this company came together, Molson and Coors came together in 2005, 18 years ago, this is the best performance that we've had from a revenue point of view. So we're very excited about that. We're very proud of what we're doing. And it really goes back to when we started the revitalization plan and came together as a new team 3.5 years ago. I would say to you, Kelly, that if this had happened to us 3.5 years ago, we would not have been able to meet the demand from a supply chain point of view. And our brands certainly weren't as healthy today they're much more healthy today than they were then. So I think the hard work we've put in over the last 3.5 years is why we're reaping the benefit now.
So that's super interesting. So what you're saying is COVID and what that forced your company, like many, to do, which is to kind of, and you maybe could explain it, kind of rejigger the supply chain, actually allowed you to have a rapid response when Bud Light slipped so that you could better take advantage of that opportunity?
Absolutely. From a supply chain point of view, that's absolutely correct. I think we're battle hardened with everything that we've gone through over the last 3.5 years. And, frankly, our brands were not healthy 3.5 years ago. Coors Light had just experienced a year where we were down double digits, and we worked really hard to change that trajectory, to create brands that were very clear and differentiated from each other. And I think we've done a really good job of that.
What would you say when, and this is interesting because we all know that brands go through, high moments and then they fall out of favor, whatever. Did you catalyze that change in a brand like Coors Light, or do you think people just kind of had to come back? Explain how proactive you were as a company to make that happen.
Well, on both brands, right? I think the campaigns had shifted around quite a lot. And one thing we've been over the last 3.5 years and really diligently so is stuck to the message that we're trying to land with our consumers. Coors Light, refreshment and chill, and Miller Lite taste, and it's Miller time. And we haven't changed from one campaign to the next and created uncertainty in our consumers' mind. We've stuck to what's working, and we can see the benefits now.
Yeah. So where do we go from here? We've talked a lot about, the market share that you've taken. Bud Light struggles are well known. It looks like perhaps a permanent significant loss of market share. But that's kind of a one-time event. Once you lap that, especially, what do you invest in to kind of create the excitement to, where do you go from here?
Well, the exciting thing, Kelly, is we're seeing momentum in all of our big markets, whether it's Canada, whether it's the UK, with our probably our most successful innovation in our European businesses history with Madrí, and then our core brands and our innovation and flavors in the United States. We're seeing the benefits of the work that we've put in over the last 3.5 years everywhere. And obviously, our job right now is to maintain that momentum. We've maintained the momentum on our brands into July, and we're going to put an extra $100 million behind mostly our Americas business to make sure that the shift that we've seen, the consumers that have moved across to us and liked what they've found, stay with us and actually build on that. We're seeing benefits coming through from retail chain resets. Some of them are doing it before they would normally do it, and we're working really closely with the chains to make sure that they recognize the seismic shift that we've seen from a consumer point of view when they do their spring reset. So, we're putting a lot of time, effort, and frankly, a lot of money behind making sure that we maintain this momentum and grow it.
Two more quick questions, if I could. The first is, are you done raising prices, or is there more inflation in the pipeline?
I think the big price increases that we had last year are done. I think we've been pretty clear that we expect pricing to migrate back to the sort of 1% to 2% historical level that we've experienced, and we'll be looking at doing that on a brand by brand basis as we head into fall.
So, which is helpful, thank you, as we think through this from a macro point of view. The second question, also kind of getting to a larger trend, is what's your advertising budget in terms of where is that spend going? Is it TV? Is it social? Is it, Amazon? Is it Uber? I mean, is it Walmart, right? Every time I turn around, there's a new platform vying for those dollars. Digital side has been a little bit softer. Just where do you think that you're going to be investing the most in your ad dollars?
That's probably the biggest change that we've seen over the last 3.5 years, Kelly, driven in large part by the pandemic. I would hazard a guess that 3.5 years ago we would spend around 10% of our marketing in the digital world, and that now is well north of 50%. So we've had a pretty big swing over the last few years, and so you can assume that most of our dollars will be going into that space.
Wow. All right. That's the channel. Gavin, thanks so much for your time today. It's great to check in with you, and we really appreciate it.